Hey, what's going on, everybody? So this video is the trade review from the trade that I took Friday the 17th. And I specifically wanted to show this video because, like the title says, I want you to see what Apex allows as far as trading, Apex Trader funding. I know a lot of people, if you trade with Apex or if you're in any of the Apex groups, anything like that, I know you had to have seen all of the mess, the drama going on with Apex, the rules. Are these new rules? Are these existing rules? Well, that's been cleared up by John. He was awesome with that video that he put out, and they updated the consistency page in the FAQ. So if you are not familiar, pull up the FAQ on Apex Trader funding. Let me do that really quick, so I can show you where to look. Okay, so go to the apextraderfunding.com, ATF.com. Go to FAQ right here. Click that. Type in consistency. Right here, what are the consistency rules for PA and funded accounts? You want to click that. All right, watch this video. John goes over everything. Then in here, he goes into more details about what Apex is looking for, the risk management as far as the stop losses. There was so much confusion with the stop losses, how much, all the DCA, the dollar cost average. He actually goes in here and look at all this information, okay? He explains everything, guys, everything. If you had any questions, if you don't know what they meant, or if something you feel is, in a gray area, it's all here. It's all here, okay? It is all here. Check it out, read it, watch the videos. And some people, I've seen a lot of people appreciate this. They say, wow, that's a lot of great info. Now I know exactly what to do, what not to do. And I've seen other people say, look at all the stuff. You look at why Apex has a lot of stuff, a lot of rules, right? A lot of stuff going on here. But it's clear if you think about it. Think of it. Would you rather the company you're partnering with and trading with using their funds, right? Would you rather them be more transparent or less? Be more upfront with you about everything or less? So only the people that are looking to, trade use prop firms like the lotto ticket or, scam them, they're the only people really concerned. I'm telling you. And the purpose of this video, like I said, I want to show the people that I interact with, the people and part of the communities that I've, built up here. I want you to know where to go to look for stuff. I want you to have clear answers, but also the trade I took Friday, I specifically did what I did to show you that Apex is okay with certain, with this. They're okay with this. And I'm going to go through that, okay? But I just wanted to show you this so you know where to go. Read everything here. It's clear, guys. It's clear. Okay? There's no new rules. Like they said, it's existing rules. They're highlighting them. They explain it all here. I had to just hit on that. I know I answer a lot of questions in the groups, typing and all that, but I wanted to say it here on this video, and I want to show you this trade, okay? So this was Friday. All right, so now we're going into the trade review part, but also I want to show you what is okay with adding in, okay? They say you can add in one. I don't ever add in to losing positions. I don't scale into winners. I typically know exactly where I'm looking to enter. I know exactly where I'm targeting, and I know where my stop loss is. And I don't need to mess with it at that point. Sometimes I could trail it. Sometimes I could tighten, go to break even. I can do that. Other than that, that's it. So I have the video here. I'm not doing it on my chart because it's easier. And because I trade on TradingView, maybe it's just something I'm doing wrong, but because I trade on, I actually execute on TradingView, and then I copy my trades to my Rhythmic accounts. So my leader account is a Trade-O-Vate account. So once the day closes, my executions on TradingView don't show anymore. So that's why I'm doing it with the video, because I record all my trades. And if you don't record your trades, do it. I highly, highly recommend it. Record yourself trading. That way you can hear yourself. And that actually helps me a lot with my discipline issues, emotional, psychological stuff, all that. Because when you're in the moment, you don't realize things, right? When things are going bad, when you're spiraling out of control. But when you go back and replay it, then you could pick up on all the signs. Write them down. Don't be ashamed. Nobody's there with you. Nobody's going to make fun of you. It's just you, right? Trading is a lonely business. Write them down. Oh, last time, look at this. Look at my video here. When I lost control and I started spiraling out of control, look, I kind of started doing this. Write it down. You'll start noticing those signs, and then you can help stop it, right? Okay, so anyways, let's go here. I'm going to hit play. I'm on a 5-minute chart here. For those of you that don't know, I trade ICT concepts. I'm on a 5-minute chart. You can see here, we left a 5-minute fair value gap right here on this down move. I don't trade the open. If you see, I guess this is kind of blocking the time. I don't trade the exact open. I wait till 30 minutes at least. Okay. I look for the 10. I do the 2022 model, and I look for the 10 to 11 a.m. trade. So here we have the opening move, right? This is the opening move, left a 5-minute fair value gap. There was also a 15-minute there. So normally I'm using higher time frames for my analysis, but then I'm looking to execute on the 1 through 5 minute chart typically. Okay, so then we have price ran down, left those up there. And look at this wick. Whoo! Oh, these shaded areas down here, that's a 1 hour fair value gap and a 15-minute big one down here. So I was overall on the day, I was bearish, but we had some, a lot of liquidity down here, but also I was looking for the move to come back and rebalance these before we are bearish for the afternoon. I don't trade the afternoon, so I'm not looking for that afternoon move. If I was looking for the afternoon move, I called that sucker for Friday. I said between 115 to 130, we're going to drop down. I got screenshots to prove that. But it's not me. It's just what I'm learning. But if you look here, we have this 5-minute gap, right? 5-minute fair value gap. Look where the bodies close. We have this wick here. But look at that. It just came down to this bottom here. Wicked, but look where the body's closed, okay? So, let's fast forward it a little bit here, because I want you to see. So, like I said, I'm looking for a long. So what I did was, this is the 1-minute chart. What I did was I measured the dealing range from up here to down here, where that wick was. Let me go back to that 5-minute chart right here. You see that? It wicked down there. The body's closed here. So that's telling me something. But I measured out the dealing range from the top to here, the bottom. Here's our equilibrium, right? So for me, I look for my trade to take it from a discount to a premium. But what I'm looking to do, because I'm not right now, I don't hold trades for 100, 200, 300 points. I wish I could. There's a couple reasons. For one, I'm not quite there mentally to hold that long. The other thing, I don't have the time to, because sometimes those things, when you hold them like that could take hours, not just 30 minutes. Sometimes it could take 1, 2, 3 hours. I don't really have the time. I specifically set my time every day to trade during that time. If I get a trade, great. If I don't, oh well. Okay. So those are the reasons why. But check this out. I was looking for a long underneath this 50%, and my target was right here. I thought maybe it could come up higher, but definitely fill these. But for me, the low-hanging fruit is right here. It's going to be right here. The first imbalance on the other side of equilibrium. Okay. Let's go back. So here we drop down to the 1 minute because we are displacing. We're displacing. So I'm dropping down and I'm on my other screens looking at the 1, 2, 3, 4, 5 minute charts. Okay. Because I'm looking for a fair value gap and imbalance. So what do we have here? Right there. It's displacing, taking out all these wicks. Okay. So these swings, this pop down here, come back up, displacing. I was really looking for it to take, like it took these swings, these wicks here, but I really was looking for it to take up here, and it did. Left this, well, I prematurely marked it because I want to see this stay. I want to see this stay. We had this little one down here, as you can see. So created that little one, took these swings, created this one. So where's my entry? My entry is going to be in here. Okay, so we got it. So let's see. So just to break it down, look how it came right back to the equilibrium. Exactly to equilibrium, came back down. My entry is here. And you have to expect price could come back to this one. It doesn't always. So that's the thing. Okay? You can enter here, but you need to have a stop down here. So we're looking at about a 20-ish point stop, 20 to 25 point stop. And that's typical. All my trades are 20, 25 points. And I want a minimum, I really want a 1.5 to 2 ratio. But minimum, I need a 1 to 1. If I'm risking 20, 25 points, I need to have room to make 20, 25 points or more. In this case, my entry is here. Or if I got in here at about 648, I'm taking it right up to this area. So I'm looking for about 20 points. I'm risking about 20 points. It was not the best day Friday. And then also we had the Fed talking, one of the Fed members talking. So it's being a little conservative this day. But so the entry, you can enter here. But like I said, you have to be okay with it trading down into here. And then this was an order block pushing down here. So because we had pushed down into this area and then displaced back up. So I know I'm not sweating this because price could trade all down here. Okay. Now, doesn't always. It could trade into this one and take off. So you have a choice. Get in here, have a stop down here, or wait for it to come here and get in and risk missing a trade if it doesn't, or you get in here and comes back in here, you get in there too. Okay. So this is not dollar cost averaging. This is entries with zones, with targets in mind. This is a strategy. Okay. Where you're seeing all the dollar cost averaging is people that, let's say they went long up here, right here, right? Price is going up. They went long and it starts coming against them. So they say, let's get in here. And it keeps going down. So let's get in here. Let's get in here. As it keeps just going against them, they keep adding in. And then as soon as it gives you a pop, so let's say they're down here, they're averaging down. And as soon as it pops up a little bit, boom, they get out. That's just a dollar cost average strategy where they're just adding in, bringing your average down. That way, as soon as it pops up, boom, you get some profit. You're out with a couple points. And that's not what Apex wants, because yeah, that can work until it doesn't work, right? Because then when that sucker loses, you're losing a lot of money. And the issue with that is that Apex, they do copy trades. They do copy some trades in that are in PA accounts, not even in live accounts. So they copy some traders there. And then of course they do copy the live accounts, right? So do they want to copy people doing that? No. So that's their rule. Okay. So I'm going to play this trade or play this. See, I got in, boom, got in there. And I'm fully expecting Yeah, I normally don't get back in again. I just hold it, right? But I wanted to, with all the mess, I wanted to show you that if you do enter in again, there's ways to do it, right? And you can see when I entered in, I didn't enter in with a stop right away. Where do you see my stop right now? You see my entry. Where do you see my stop? Where do you see my target? Apex says that's okay. You can enter in and then manually place your stop and your targets, right? That's fine. I really want to explain this stuff because for two reasons. Like I said, this is a chart review for my Friday, but the other reason is to show you it's really not that big of a deal. It's really not that big of a deal, guys. If you're trading, if you're actually trading. So the people that are really causing a mess with this they're not trading. They're just looking to gamble. So then I go in here, I throw in my stop. Okay. I come up here, I throw in my target. I have this area. I'm playing it safe Friday because, like I said, we had a Fed member talking. There's not a lot of, the market wasn't really moving great. So I'm playing it safe. Right? I'm about to throw my target in there. I'm deciding, do I want to take it up here? Because it probably will go up here. Or do I want to just throw it right here at the low hanging fruit? Let me grab my profit and be done. Right? So, and see, this is what I'm deciding right now. So I'm like, okay, let me throw my target up there. Now, like I said, I'm expecting price could come down here. And so when you have an expectation of price and solid, strict money management, you don't panic. You don't freak out. Because if it does lose, it's a loss. It's part of the plan. I'm not risking more than what I planned. Okay. Let me fast forward to here. So you see price coming down. Oh, hold on. You see price coming down. Bam. Here, let me back up a little more. So look, here it comes. As I said, I'm fully expecting that it could come right here and hit this. I'm even manual. Look, see, I have the buy. If it comes and hits it, I'm throwing another contract right there. Bam. Let's go. Well, almost bam. There we go. Threw in another one, entered right there when it dipped down into these fair value gaps on the higher time frames, dipping down into this gap, this order block. So now I just have to adjust, my stop for the contract side, for the extra contract. So all I did was enter one more, fully expecting that this could happen. And that's a strategy, right? That's a strategy. I have my entry here. If it dips into this lower one, I can get in. Normally, I don't. Normally, I just hold it. Just whatever. But I really wanted to show everybody it's okay. This is okay. All right. So then I have my targets, my two targets. And you can see. Put it right below the wick right there. And we're good to go. We're going to let this baby ride out. So I'm not going to make you sit through all this. Look how close it gets. No panic. We're not going to panic. If it ticks me out, stomps me out, boom, I'm done. Move on. Next day. That's it. We're waiting. And I marked this gap, this fair value gap on its way down. I marked it as a inversion fair value gap because it's not yet, but that's what I want to happen. I want this to become an inversion fair value gap. Come up and then come back and test it and then take off. So you can see it got really close to stop me out. Do I keep moving my stop? Do I keep adding more? No, I don't have a real reason to add in more down here because that's not my entry model. My entry model is here and it could come down to here. That's it. Apex allows you to enter one more, right? One more when it's against you. Got very close. I mean, very close. But I'm expecting it to not come down below this. And if it does, I'm one out. That's simple. That's simple. All right. Pops up. I'm just moving stuff. Notice this little volume imbalance. So I'm definitely expecting price to come back up through there. And if price comes back up through this volume imbalance, it should it'll invert that gap there. So then we created this fair value gap coming back up, took these wicks here. So now I'm feeling very confident that it's going to go now. Just fast forward a little bit. Comes right back into this gap now. Has this little order block. So also, like I said, the Fed was talking too. So it was a Friday. It wasn't the best price action day, but it still did what it was supposed to do. Just gotta have patience. Okay. Come back up. All right. Now it's popping up and inverted this gap, left, or about to leave a new fair value gap right there. Perfect. Beautiful. It's what I was looking for. So what I was wanting. Comes up, left a gap there, left a little fair value gap there. May come back down and test this area. I'm okay with that. Or, coming down and trade into there a little bit. Especially when we have that inversion fair value gap. It might come back down and touch that area. Fast forward here. Hitting equilibrium again. Fast forward. And now look at this. Guys, I don't care what people say about ICT. People say he's a fraud. People love him. I don't know the guy. I couldn't tell you. What I do know is all his teachings are free on YouTube. And when I started going over and going through this stuff and seeing it on my charts for myself and seeing how it lines up with everything he's saying, I can't deny it. No matter what I think about him. I personally don't have any problems with what he does or how he says. I actually like everything that he says. But look at this. I mean, it came down to the tick to that inverted fair value gap right there and tested it to the tick and takes off. Mind you, I'm drawing all this live while it's happening. There's no indicators. There's nothing. There's no indicators, nothing on my chart. I'm making all these annotations. And I'm doing this because I'm still learning. I'm only 6-7 months into this. But look, to the tick. Look, equilibrium right here, to the tick. I can't make this up. I can't make it up. So say what you want to say about him. This stuff, it's amazing to me. So ticks right there. Fast forward. Fast forward. We have this little down close candle. So on its way up, I don't want to see a down candle take out another one. Okay. As it's going up, this down candle here, it can pull back down, but I don't want to see it take out the low of this down candle. That makes sense? And that's what gives me the confidence to stay in. So as you can see, I pulled up my stop now. That's called money management. I pulled up my stop. I don't need to be at this low anymore. Price should not come back down through this. If it does, I want out. That's it. So I tighten up my stop. My risk is less. And because of price, the Fed talking and Friday and everything that was happening, I decided not to go for that higher target up here and just take off my trade right here at the low hanging fruit. It should rebalance this, but I don't care. So look, price came down, came right back into the wick of this down close candle right here. Let's see how far it pulls back. Just right there. Oh, look, what's that? The midnight opening price. Now I marked these lows here. Price should not come back. It could, and it's okay if it does, but it shouldn't come back below these wicks right here until it just keeps making its way up. So fast forward a little bit. Making our way up, making our way up. A lot of people right now could be going, ooh, a few more points. Only a few more points. Oh my goodness. And then it starts looking like it's coming down. Oh no. Don't panic. If price comes back down below these little wicks right here, then I might start thinking, maybe it might not go. Bam, there we go. Profit. And like I said, it could rebalance all this. And it could keep going. But like I said, I was going for the low-hanging fruit. It's typically what I do until I get better. So put my markings here. Oh, this short here, I took this short and I was targeting down the London low. But I got out right here because I took this short right up in here and I realized it wasn't copied to any of my accounts. I was like, oh my gosh, are you kidding me? It was me. I didn't set something on the copier. And so I noticed and I was like, it's before 10 o'clock anyways. I don't care. Let me close that. That's what happened. Otherwise, you can see I could have stayed in that thing too. But yeah, check that out. Oh, look at that. Let's see. Pulled back a little bit, rebalanced it. That's a 5-minute chart. I don't know if I go back to the 1 minute. But look what happens. Rebalance that. Look at, it's going right back up into this little gap here, but I was already done. Wasn't paying attention anymore. So, but from there, that's as high as it went. Then it made its way down, made a lunchtime range, and then sure enough, the afternoon, it just dropped. So this video is a little bit longer than what I wanted it to be, but my trade reviews are typically not going to take 30 minutes to do. 10 minutes, 10 to 15 minutes, maybe. But I really wanted to show you, talk about the rules for Apex and show you that this is okay. What's okay? Why is it okay? I did it to prove it. Okay. I did it to prove it. I have a very specific strategy. Very, very specific strategy. And I can show it. So let's say, for example, Apex reviews when I put in a payout, right? I put in a payout request. Here, let me see. Just trying to get to hold on. Right here. Let's say, and this is what will happen to you if Apex does question a trade. And they say, hey, I noticed, and maybe they might not even ask you if they notice this pattern. But if they notice a pattern of you doing it, getting in, and then, 10 points later, if the trade is in the negative, you enter again. If they see it repeatedly, multiple days, they might automatically, actually, they probably will be like, you know what? I see a pattern there. That's their trading strategy. But let's say they don't. Let's say you submit a request. They say, hey, we notice when you're in a losing position, every time you're in a losing position, you add in. Can you please explain your strategy? This is what they do. This is what they do. They just ask you. Just because they ask you questions doesn't mean it's like a bad thing or that, you're going to get denied. Just if you're trading a strategy, show them. So this is what I would do. I would take this screenshot and any other day, because I do the same thing every time I trade. It looks the same. It just might be from the top of my chart going down or from the bottom of my chart going up. It's going to be one or the other, but it's going to look the same. If you're trading as a strategy, it should look about the same all the time, right? I know there's some variations, but I can show them clearly. Hey, when price moves up and has a market structure shift, creates this fair value gap, this is my entry, but it actually created one down here as well. So I get in here. If it reaches down for the lower one, I throw another position in. They'll say, you know what? Okay, good. And then I manage it this way. Then once it starts moving up, I tighten up my stop. They'll say, you know what? That's a responsible trader. Here's your payout. Wham, bam, thank you, ma'am. That's it, guys. That's it. So anyways, so this was, like I said, a combination of the trade review and talking about the mess of the misconceptions with Apex and all that going on. So, but stay tuned. More trade reviews are going to be coming out, more content, more stuff, and it's going to be fun. I'm excited. about this new move to me posting stuff on the social medias, be a little more active on YouTube and all that good stuff. So if you're not in my Discord group, join it. All links are in the description below. So it's the weekend now. I hope you grab your accounts. Hey, I didn't even mention the discount because I was just too into this, but win 90% off. The 250K accounts are the same price as the 50 accounts. For $16.70, you can get a Rhythmic 250K account. The PA fee is only $85 for the lifetime option. That goes on. The PA discount goes on to the end of the month. The 90% off goes on till the 23rd, I believe, which is, Thursday the 23rd. So grab those, win 90, and I hope everybody has a great weekend. We'll see you Monday. Trade well, everybody, and take care.